What's going on, everyone? Sid Misra here, certified financial planner. Thank you so much for tuning in. I'm back with another episode of Ask a Financial Advisor, where I answer the questions sent in by the viewers of my YouTube channel, listeners of my podcast, readers of my newsletter, and the general public. Now, today's question comes from a friend who's concerned about the market volatility and their investments. And I think a lot of us feel those same concerns and feel a certain type of way because of what the market has been doing over the last year. So that's why I thought that this question would be relevant to all of us. So let's get into it. Now, this question comes from a friend that says markets have been down since the start of 2022 and also pretty volatile. Lots of swings up and down, both big and small. My question is this: when should I be making a change to my investments? I feel like I shouldn't just be sitting around doing nothing, and that I should be proactive because markets are so volatile. So, great question that we're asked. A lot of people see market volatility, see down markets, and they wonder, should they be making a change to their investments? Should they be doing more than they are instead of just sitting back and letting the investments ride out? Again, great question, because a lot of people feel this way, and it's important to reiterate this point and keep bringing it up so that you understand how to handle it when markets inevitably again go down. So here is my answer, and I'm going to keep it very simple. When we look at our investments, we need to make sure that our investments align with what we're trying to accomplish. Do these investments reflect what I want to see happen in my life? So take a look at that. Figure out what your goals are and figure out if these investments, if the things that you're investing in over a long period of time are going to get you to where you want to be. If the answer is yes, if your investments do align with your goals, then why would you change your investments? Just because there may be a down market in the short term or the intermediate doesn't necessarily mean that you need to change your investments. You may be invested properly. You may be invested per your risk tolerance, your time frame, and for the goals that you set out for yourself and your family. And if that's the case, there really isn't a reason to change your investments just because of some volatility. That volatility is part of a natural market cycle. It's always going to be there. Unfortunately, if you're a long-term investor, it will be there throughout the course of your investing life. And so it's something that we need to get used to. Volatility, the swings up and down markets, that's all the price of admission to growing your money over the long term. So again, if your investments align with your goals, your time frame, your risk tolerance, market conditions in the short term shouldn't change what you're investing in. It shouldn't precipitate any sort of investment change or strategy or you doing anything really. If you have those things taken care of, if you have a plan and you figured out what you're supposed to be investing in, the short-term market swings over the past year, even a little longer, don't mean that you need to make a change. Now, if you've taken a look at your investments and you're like, you know what, these particular investments don't really align with what I want to do. They're not really helping me get to my goals. I don't know why I bought it. Maybe I bought it because it was a recommendation from a friend or a family member, or you just heard something in the media about a particular security. If you take a look at this and reevaluate and see that your investments are not aligned with your goals, then I would say, yes, it's a good time to reevaluate why you picked those investments and to see if there are things out there that will help you get towards your goals. The biggest thing that we want to do is have a plan for investing. And that plan includes figuring out the goals that we've set for ourselves. What do we want to accomplish? What do we want to see happen for ourselves? And then backing into the investments that way, right? What investments align with that? What investments align with my goals, my time frame, my risk tolerance, and allow me to accomplish the things that I want to accomplish? If they don't, reevaluate, go back and figure out what investments can. And if you need help, don't be afraid to ask for help. We should only be investing in the things that are moving us forward and helping us progress towards our goals. And we shouldn't be investing in the things that don't take us towards our goals. We shouldn't be investing in those things that aren't aligned with what we want to accomplish. That stuff is too important. There's a lot of noise out there, a lot of investments and different choices. And if you can simplify your process for investing, By doing this, I think you will remove a lot of stress from your life, and the market movements that we see on a normal basis won't bother you as much, right? The biggest thing is we want to be able to enjoy life, and having that stress hang over our heads is not going to allow us to do that. So again, evaluate your investments, make sure they align with what you want to see happen, and if they don't, figure out a plan on how you're going to find investments that will do that. Thank you so much for tuning into this episode of Ask a Financial Advisor. I appreciate you tuning in. Stay tuned. I have a lot more videos coming. Thank you.